Hi, I'm Ken Lee. I'm from InnovaCorp, and we're speaking about fundamentals of a great pitch today. So we're down to the last couple of slides. We're going to talk about financial projections or financial results, if you will, about how much money, what you're going to sell, what the revenue flows are going to be. Typically, these are 3-year forecasts. So forecast because you're looking into the future, right? That causes some difficulties for some people, but really it gets down to what are your assumptions to build on that forecast. That's a real important thing. But the first 18 months are the most important. So you got 36 months of forecast. I'm gonna who will know, right? What you're gonna sell or what costs might come 3 years from now. It's really an exercise to show how you get from where you are now to where you plan to be in 3 years, right? What's your plan? It all kind of rolls back. It all kind of rolls into this forecast. Everything in the front end, how you're going to go to market, who you're going to hire on your management team, when. It all gets encapsulated in here. So first 18 months are the ones you want to focus on with some granularity. You want to talk about cash flow. That's a very important thing. How much cash is going to come into the company. And that cash flow could come from either operations or it could come from tax credits, government tax credits, or different programs or investment. You want to show all that. So what you want to show is how much cash you have. What's your monthly burn rate is kind of what is a common metric in terms of defining how much time do you have to get to wherever you're going to go before you need to raise more money. Income statement comes from what your revenues and all your expenses. Balance sheet shows who's invested in it, what kind of assets you have in there. The key metrics you want to show at this early stage is what are the units of sales, as an example. What's your gross margin? You want to be able to articulate about what kind of revenue stream or cash flow, how many people that you might hire, what your staffing might be, so you can talk about the scalability, and how many customers that you've come on side. These are all things that you would want to talk about in the projections. And again, keeping in the spirit of this pitch, you don't want to get too deep into the financials. This is all high-level stuff. So you don't have to get into coffee expense or parking expenses for employees. Like, that's too much detail. Just keep it high level. You might even want to just consolidate them, revenue lines or expense lines all together. They just want to know what's your revenue. Really, they want to know what's your revenue for dollars and how many you're going to sell, what your gross margins are going to be, what your net profit might be, and what your cash flow is, and how many units you're going to sell. Okay, some tips on this. Doing a bottom-up forecast. I don't know if people know what that means, but typically what we've seen is people do all the market research. They say, hey, this is a $1 billion company, or a $1 billion market. We're going to get 1% of it, and that's going to be whatever the math is going to be. That's my market share, right? And that's going to be their revenue, and they base it on that. But it doesn't hold a lot of water because it doesn't show that you've thought about how your business is going to be run. It doesn't show that you've thought about your business model or your go-to-market strategy. You're just taking one big number and just arbitrarily taking a percentage of that. That's typically how I've seen a lot, novice do that. It's really annoying if you're trying to convince somebody to invest in your company. It's really annoying to do it this way. You want to do it bottom up. So what that means is you start from the bottom. How many customers do I think I can sell that are in my addressable market? Times that by whatever price you're going to sell it at. How many units do you think you are? Build it up from the bottom up, and then you have a more credible plan. It also forces you to think about different things as well. It makes you more ready for the pitch. So take into account sales cycles. We talked about that earlier. Something might take long. Sometimes it's dips and valleys. It's usually not consistent cash flow. And at this stage, this early stage, you want to be able to show that you're going to know where your cash flow is going to come in. That's your bloodline. So you need to know your sales cycle and whether there's seasonality. An important thing at this early stage of, hey, you can do one way. You can say, hey, I'm going to be 95% accurate on my financial forecast, and I'm going to do what I'm going to say. You're going to see 3 years from now. That really is less important than showing what your assumptions are to get at the numbers at this early stage. So really, what investors want to see is what your assumptions are to get you from where you are to where you say you're going to be. And that's really the more important thing than trying to nail down. I see this a lot of time. People spin their wheels and lose years of their life trying to get that 95% accuracy of where I'm going to be. So at the early stage, the first 18 months, where it's more near term, that's going to be more important. So you want to focus on that. Staying high level. So again, don't want to get too deep in. All you want to really talk about is revenues, expenses, how much your margins are, how many staff you're going to have, because that affects your runway. How many staff you're going to also have could also talk about how efficient you might be, right? Because you're a lean startup. You don't want to hire 30 people to do something that if you could get it down to 3 people or 4 people, it's a better story, right? So that's where the head count is important. But having said that, keeping it at a high level, and this goes for the whole presentation as well. Keeping it at a high level when you're pitching, but also having it inside your brain or in backup slides, more in-depth information, and be able to draw on that if you need to. So don't get confused between staying high level and not having the information going into the pitch, with staying high level but having all your homework done, being able to go at it if you're called to task to do it. So you need to be prepared.